Time now for an in-depth look at the market news, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, thank you for coming on.
Happy to be here.
Well, the sell-off on Wall Street did indeed continue. When the markets reopened on Tuesday, a decline on the Nasdaq of more than 4%, wiping out weeks of growth. What's the story in the global markets?
Okay, well, as you said, Monday was a Labor Day holiday. Tuesday, all the major stock indices for the United States went down. Dow went down by 2.25%, S&P by 2.78%, and Nasdaq, as you mentioned, minus 4.11%. This brings the stock market indices to about the level that it was on early August, so about a month growth was wiped out, and the other global markets have been following the U.S. lead. European markets were down yesterday, though they just started their market about an hour ago, and it might be a bit of a happy news. The European markets seem to be rising, but they're at the early part of their day, so we'll have to see how it goes on. The Asian markets have closed. Nikkei, Shanghai, and Hong Kong, they all went down by more than 1%. KOSPI went down by 1.09%, Kosdaq by minus 1%. And again, they seem to be following the U.S. lead with the falling market. Now, the interesting story that's coming out of the United States is why did the tech stock prices rise so much, and why did it collapse at the end of last week? And reportedly, it's the fault of SoftBank of Japan. SoftBank bought a large number of call options of U.S. tech companies, and as the tech stock prices rose, it became more possible that the SoftBank would exercise this call option, which meant that the counter side, the people who sold the call option, had to buy tech stocks so that they could hand it over to SoftBank when they exercised that call option. So these counterparts bought up so many tech stocks that it accelerated the rise in price of the tech stocks. And once they stopped buying, the rise in prices stopped. And presumably, when SoftBank accepts these stocks and sells them, the prices will collapse perhaps even more. But no one expects the stock price to fall forever. They think that it will rise eventually and fairly soon. It's just a matter of when the rise will start again. And SoftBank, even though with just this transaction, they probably would have made a lot of profit, still SoftBank took a loss in the Japanese stock market, apparently because while they may have made money on this call option transaction, their investment for the last few months, including their investment in IT firms like WeWork, hasn't done very well, in large part because of the coronavirus.
It's a fascinating story there. Looking at the local economy, the Korea Development Institute has joined those who are predicting contraction this year, and the KDI says it won't be a V-shaped recovery, but it'll progress slowly into next year. What do you make of this forecast, Professor?
Okay, well, KDI, they labeled this update as update to their May projections rather than an entirely new projection, but they did change the numbers quite a bit. The 2019 growth will fall from positive 0.2% to minus 1.1%, and next year's growth will fall from they lowered their estimate from 3.9% in May to 2.5%. So they're basically saying that the slow growth will be extended. And their reasoning is that consumption will fall by 4.6% this year, and it will not completely recover next year. Business investment and construction will do fairly well. Business investment will rise by 4% this year, more than 4% this year and next year, basically because last year's investment was so low, and semiconductors are doing well, but still it will not be able to overcome the fall in consumption, and there will be fall in exports as well. This year it will fall by 4.2%. Next year, KDI projects it will rise by 3.4%. But again, that's not enough to recover from the negative growth that we had this year. So inflation will remain weak. 0.5% for this year, 0.7% for next year, and 150,000 jobs will be lost this year. They will be made up next year. 150,000 jobs will be gained next year, so it'll on the whole net out, but there will not be any additional job growth until probably 2022. So they're expecting a very bad year this year, and next year's growth will be not enough to make a full recovery.
All right, Professor, we'll have to leave it there for today. That's all the time we have. Thank you so much for coming on. We appreciate it.
Thank you.